What is up, guys, and welcome to episode 13 of the 2K Robinhood Options Trading Challenge. In this series, we started a Robinhood account with 2K, and we are trying to grow it to 3K as quickly as possible. And in this video, we are going to be covering all of the trades made during the week of October 31st and see how much we were able to profit. So before we go ahead and get into all of the trades, if you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Before we get into everything, as you can probably tell, I am super sick. I am not feeling well. And honestly, my voice just sounds absolutely terrible. I'm super stuffed up. So I'm really sorry about that, guys. But I hope you guys still enjoy the video. Drop a like for powering through it and getting this video out. So this was another rough week in the market. We have been having a lot of rough weeks in the market. What we can see is, the market started high at the start of the week and basically just tumbled down throughout the week. And that really hurt a lot of our spreads. So we tried putting on spreads basically as the market fell, but we had a huge spike in volatility later in the week. And that really forced us out of a lot of trades. Like I talked about in the last video, is that we were trying to basically mitigate our losses by closing out trades a little bit earlier than we have in the past. And really, when volatility spikes up like that, like we saw, I think it was on Thursday, where volatility basically just shot up through the roof Wednesday and Thursday, that really is going to force us out of a lot of trades. So we're going to have to adapt our strategy a little bit to make sure that we kind of keep moving forward in a very, correct way that is not going to force us out of a lot of trades if there's, a market move on just a single day. The first trade that we have up here is a put credit spread. So this we put on last week, and we were able to go a little bit far out. We were kind of looking at the chart here, seeing how low the stock had been, SPY had been over the last couple of weeks, and it was kind of around that $355 mark. So we came out here to this Friday, November 4th, and again, just kind of seeing if the 90% range was around that point, and it was. So we came all the way down to $358 and $357, put on a put credit spread, and we were able to collect $7 from this spread. So the second trade that we have here was another put credit spread, and we were looking at the market, and the market was kind of gapping up, and honestly, this trade was not a very good trade to put on because I was looking at the market and I was looking at all the earnings that were released over the last week and a half, and I wasn't really expecting a whole lot of upside. I mean, Apple was the only one that came in with, somewhat decent earnings, and it was a very slight beat. Not very great, and basically the market started gapping up. So I thought it was going to start to run away and potentially start moving up and moving in a positive direction. But overall, that kind of came back to bite us this week because it did move up through the end of last week, but then this week we saw a lot of pain back in the market. So we ended up getting the fill here for $9. The best trade again was a SoFi trade for this week. So we came out here, SoFi reported a slight beat in earnings, so the stock spiked up quite a bit. So we were able to come all the way up here to the 650 call and sell that for $19, and we did end up getting a fill. So that's pretty good premium on it. In retrospect, obviously with the market tanking, it would have been better to go down and sell at the 550 or even $6, but we did get a decent amount of premium here. The only other thing that we really did this week is with SoFi spiking up, I saw it as a good opportunity to close out this debit spread. So we were able to collect, I think it was around $47 for this, which is not too bad. We put it on originally for like $52 or $54. So we ended up losing $7 on the trade. But honestly, there's not a whole lot of catalysts over the next couple of months that would send SoFi higher. So I saw this as a good opportunity, just to get out of this trade and, squeak out with a very small loss. Here we have the spreadsheet where we recap all of our trades. So again, just to go through them all, this is the week that we are looking at. This is a trade that we put on last week. And remember, we closed out basically immediately because we were expecting Apple to report really poor earnings, and they ended up not. But with Apple, obviously, if they had reported poor earnings, this put credit spread would have been in, somewhat of trouble because the market probably would have tanked really hard. And then you have the SoFi call. Again, that was the best trade of the week. We have the put spread here. So this one we ended up closing out. Basically, with the market tanking down and that huge spike in volatility, we saw a lot of these, basically these two put credit spreads get tested. And what that forced us to do, because we were trying to focus on cutting losses early, that forces us to close out of both of them. So we ended up closing out this first one for $32 and then the second one for $50. Obviously, in retrospect, if we left both those on through the end of the week, because Friday we actually had a green day, we would have been okay. But retrospect is always 2020. So honestly, cutting losses there and only losing, around $53 for this week, that's really not too bad. And then again, this is that SoFi debit spread that we took off, that we put on a long while ago. Again, not a whole lot of catalyst between now and January 20th. So we saw this as kind of a good opportunity to take that trade off. So I'm going to be honest with you guys. This is what the account's looking like. We are in very, bad shape. Right now we're sitting at $1,400. This just feels like, very defeating seeing the count, how it's kind of fluctuated over the last week, right? We were all the way up at $1,652. And then at one point we were also all the way down at $1,333. So just absolutely huge moves here that have just been really frustrating. I mean, just a frustrating week all around, obviously getting sick and then obviously having your account go down by, over 7.5% is super frustrating. So I'm thinking next week I'm going to take a little bit of a break. I might trade a SoFi call and collect a little bit of premium there, and I might also sell another put against SoFi. The stock's obviously been falling quite a bit. It fell all the way from around $6 all the way down to $5.20. So I think it could be a good opportunity to sell another put against SoFi. Maybe try and not actually be forced to buy shares, but just sell the put side, and then if I have to roll the trade, kind of keep going that route. That's been our best strategy so far. I mean, the other thing that's been killing us are these debit spreads. So I tried trading them. I thought they would be a good strategy. So far, they have not worked out at all. I'm kind of considering closing this Google one just to kind of save our last little bit of premium. But this goes all the way out till June of next year. So you can see it's June 16th of 2023. So I would be surprised if Google's still down so much by that point. But, you never know what's going on in the market. So, like I said, I'm going to probably take this week off. There's CPI data coming out. I want to regroup, rewrap my head around things, kind of reformulate a new strategy. I need some new ideas of what to try, because right now, obviously, with how the market is going and how the account's going, it's not working. Our strategies are not, conducive with what the market is doing. So we need to make an adjustment, kind of see if the CPI data comes out positive and the market actually starts trending up, in anticipation that the Fed may either cut rates or reduce their hikes. Then that would actually be a good environment for this strategy. So we want to be careful that, we don't switch strategies at the worst possible time when the market will actually, start working for our strategy. So I just want to take a couple of weeks off and regroup. Obviously, if you guys really want to see next week, let me know in the comment section. I will, keep trucking through if that's what you guys want to see. I appreciate all the support so far in the series, and maybe we'll start in a couple weeks with what we'll call season 2. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.